Hello and welcome to the session. Taxation LO3 determine taxation liabilities for incorporated organizations. Are you curious about how incorporated organizations? How are taxed separately from their owners? This video explores the taxation framework for these entities, focusing on the United Kingdom. Discover the intricacies of corporation tax and profit extraction strategies. Incorporated organizations possess a separate legal identity from their owners. This means they can own assets and incur debts in their own name. Shareholders enjoy limited liability, protecting personal assets. The company persists despite ownership changes. Taxation occurs at the company level first, then potentially at the shareholder level. Incorporation offers protection and flexibility, but adds complexity. Limited liability and easier access to finance are key benefits. However, it involves increased compliance and potential double taxation. Publicly available accounts enhance transparency, but add to administrative burdens. Understanding these trade-offs is crucial for decision-making. Private limited companies have shares privately held and cannot offer them to the public. They offer greater control but have limited access to capital markets. Public limited companies can offer shares publicly, providing access to large-scale capital. However, they face stricter regulations and reduced control. Tax advantages are similar for both types. Corporation tax applies to trading profits, investment income, and chargeable gains. Directors receive salaries deductible for corporation tax, but subject to personal taxes. Shareholders face dividend taxes on post-tax profits. This two-layer system involves company-level and individual-level taxation. Effective planning can optimize tax liabilities. Let's explore a private limited company's taxation example. With an accounting profit of £120,000, corporation tax is calculated first. After a 25% tax rate, post-tax profit is £90,000. Directors can affect tax through salary decisions. This illustrates tax planning flexibility. Incorporated taxation models include corporation tax and dividend taxation. These models help compare tax years and structures. Legislative changes impact outcomes, like rate increases or allowance changes. Companies must adapt to these changes to remain tax efficient. Understanding these models is essential for managing liabilities. Incorporated organizations must file corporation tax returns online. Accounts are submitted to HMRC and Companies House. Common software includes Xero, QuickBooks, and Sage. These digital systems ensure compliance and efficient tax management. As reporting becomes more digital, accuracy and timeliness are crucial. Taxation liabilities impact financial and strategic decisions. Separation between company and owners allows tax flexibility. Double taxation of profits requires careful extraction strategies. Cash flow management is crucial for timely tax payments. Legislative changes can significantly affect tax liabilities. Directors' payment decisions affect tax liabilities. Salaries reduce company profits, but incur personal taxes. Dividends are taxed at lower personal rates. A balanced salary dividend mix can reduce overall tax liabilities. Careful planning ensures compliance with tax laws. Incorporated organizations face higher compliance obligations. Annual corporation tax returns and statutory accounts are required. Payroll reporting and VAT compliance add to administrative costs. Professional advice is often necessary. While transparency improves, operating costs increase. Incorporation limits personal liability for business debts. However, tax obligations remain strict. Unpaid taxes can lead to enforcement action. Directors may face personal liability in certain cases. Compliance is critical to avoid penalties and protect personal assets. Taxation liabilities influence strategic decisions. Profit retention or distribution affects tax timing. Reinvestment can defer personal taxes. As profits grow, incorporation may lose its tax advantage. Continuous evaluation of tax strategies is essential. Recognized UK tax models include corporation tax and post-tax profit calculations. Late payment interest and penalties are also considered. These models reflect HMRC's calculation methods. Accurate application helps manage liabilities. Understanding these models aids in strategic decision-making. A company with £100,000 profit faces a £25,000 corporation tax. This is the primary tax liability. Post-tax profit is £75,000. Timely payment avoids further charges. Accurate calculation and timely payment are crucial. Late payment of corporation tax incurs interest and penalties. 6 months late results in £968 in interest. Penalties apply separately for late filing. Total liability increases significantly. Timely payment is essential to avoid extra costs. Penalties and interest increase tax costs significantly. Interest accrues until payment is made. Compliance failures convert tax into a cash flow risk. Late payment undermines tax planning advantages. Effective tax management requires discipline and timely payment. Incorporated organizations must treat tax as ring-fenced cash. Delaying payment creates guaranteed extra costs. Repeated late payments increase HMRC scrutiny. Effective tax management involves timing and discipline. Strategic planning is essential for controlling tax exposure. In conclusion, determining taxation liabilities for incorporated organizations involves understanding how corporate profits are calculated and taxed in accordance with current taxation legislation. Incorporated organizations are treated as separate legal entities and are therefore subject to corporation tax on their taxable profits after allowable expenses and reliefs have been applied. Additional liabilities may arise from dividends, capital gains, and compliance requirements, such as accurate record-keeping and timely submission of tax returns. A clear understanding of these obligations enables incorporated organizations to meet legal requirements, manage tax efficiently, and make informed financial decisions. Thank you for watching this video. If you have any questions, please feel free to contact us via email or WhatsApp at 0748431688.